Francisco, when you look at WTI at like 64, is that pricing in enough geopolitical risk?
Well, again, the oil market's never priced enough geopolitical risk. I think if you look at if you look at what happened into the U.S. Iraqi invasion back in 2003, oil prices. I mean, we knew the invasion was coming in, and prices were climbing into it. In fact, I remember the day before we took a poll, and people thought, "Is our price going to go up or down into the Iraqi invasion?" Actually, half the room was split at that time, and I was my former employer back then. But the price actually came down very hard, and it came down very hard because the U.S. was able to secure the Iraqi oil fields over the course of the following week. So prices came down very high. So oil is not very good at pricing geopolitical risks. It's a very good example where there's a very clear war ahead of us. It was happening. We all knew it was happening, and we didn't get the risk. But so the answer is no. Until something big really happens and the violence starts to affect the oil fields as it did back then, where Saddam Hussein had actually ordered to have bombs in every single well set out for explosion. Until we get to that point, it's very hard for oil prices to really pick up a lot of geopolitical risk.
Okay,
it's just a model, right?
Fair. So then you could probably attribute the rise to, say, expecting the OPEC, non-OPEC cut to continue further in 2018. Right. But something really interesting happened with the curve, or actually didn't happen with the curve, Francisco. If you come inside the Bloomberg, this is the curve just a month ago. This is the curve now. An enormous re-rating at the front end. Back end, same deal. We're looking at prices out to 2025 of $51, $52 a barrel.
Absolutely, and I think this is the key to the market, right? I mean, and the key question to ask is, can the back end of the curve get de-anchored? Because we all know what's anchoring that back end of the curve. It's shale. The same shale you're going to be talking about in a couple of days, right?
Oh, promoting my special already. I like it.
But, that's what's anchoring the back end of the curve, right? If that back end of the curve increases by, let's say, just $5 a barrel, we are going to have a multi-year surge in U.S. supply growth relative to current expectations. And that's going to bite into OPEC's market share. So therefore, the curve can't really get de-anchored very much from the current levels. OPEC knows that. So my sense is that we're getting towards the top of the cycle. Maybe we have another $4 or $5 a barrel, unless those geopolitics turn for the worse, and then you can re-rate the whole curve because we've lost supply. We need to fill it back up, and we need the U.S. producers to really ramp up their rate of growth.